Welcome to Global Money Talk, brought to you by SamProTV. Greetings to our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I am Remy Blair, and joining me this morning for a market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning. Happy Wednesday to you.
Good morning. Good to be here again.
Well, we are right smack dab in the middle of the week, and we are seeing the Dow and the S&P 500 near record highs, and this does come after yesterday's trading action. But yesterday we were focused on what came out of the PBOC, and overnight we got another move from the PBOC as well. So what do you make of this move from the bank?
Well, I think China is finally sort of getting serious about trying to stimulate the economy and at least sort of come in close to their 5% growth target for 2024. So what we saw overnight was the central bank cut its medium-term lending facility rate by 30 basis points from 2.3% to 2%. And that's the biggest cut they've had since they've been using this rate, since, which is about 2016. Now, there's actually slowly moving away from using that rate to manage the markets and going towards the 7-day rate, but it's still a big cut. The markets liked it, and it's continuing the sort of a big bazooka of at least monetary policy that's trying to drive them, to try and drive the markets, and that's important. You saw that Chinese markets were up, but not nearly as much as they were up the previous day. Up, depending on which index you look, up 1% or a little bit more than that. The offshore Chinese yuan traded above 7 for the first time in over a year. So dollar China below 7, the Chinese yuan rose above 7 for the first time, and it should probably stay quite strong given given the sentiment around China and that the fact the Fed is cutting. There's also, and what's more interesting is people, monetary policy is great, but are we going to get fiscal stimulus? I think we are. The question is when. The Politburo, which is a 24-member, pretty senior group of folks, are meeting ahead of the October 1st 75th anniversary of the founding of the People's Republic of China. I suppose it would be a really good time for them to be able to come out with a big package that'll make everybody happy. I don't know if the monetary policy move came up pretty quickly. They announced sort of a surprise, unscheduled press conference on Tuesday, their time, and this came out. So do they have time to get a fiscal package out before, or is the good news that they're looking at it enough and it'll come out after? But be that as it may, that's going to be really important. One of the things that came out and was very unusual is the government is doing a one-time helicopter drop of money to the extremely poor, which is probably 5 million Chinese citizens, of maybe a couple of thousand US worth is what it sort of looks like. It's unclear. We don't have all the details yet, but that certainly is a step away from what they usually like to do. They don't usually like to give handouts. I think they call it welfareism, and they don't usually like that. But in this case, it's not a big group of people. It looks great ahead of the founding of the Republic of China, the People's Republic of China, 75 years ago. The other thing that came out in a Bloomberg article, and again, waiting for more details, is supposedly there is going to be a program where they start handing out sort of unemployment or Social Security benefits, I should say, to college graduates who have been out of school for 2 years and still haven't found a job. Now, youth unemployment is pretty bad in China. It's probably around the 20% region, depending on exactly what stat you look at. You've gotten a lot of stories where young graduates who spend a lot of money on their schooling are really disappointed. They haven't found the jobs they wanted. They're lying flat. They're really not, their outlook is poor. If you can get that group of people to become a little more positive, that might change the sentiment a bit. Now, it's probably going to take more than just Social Security benefits. I mean, if you're out of school, you spend a lot of money on it, you want a job. Can they create jobs? Can they find stimulus programs that really create jobs? That remains to be seen, but I think one thing that a lot of smart investors are doing who have been short China is they're covering their shorts in anticipation of what might come out. If what comes out is a little disappointing, you can always reestablish your shorts, but there's when dealing with China, I think it's always good to remember that they have more political will than really anybody. If their heart finally becomes set on we have to do this, they'll probably do it. So that's why if you're short, you might want to cover your shorts and see what happens. So I'd expect China to be relatively steady, Chinese markets to be relatively steady in the coming week or so, certainly into their holiday.
And the countdown to October 1st is on, and it's not just in China but also stateside that we're watching that date for many reasons, which we will go into.
Right.
But I think before we move away from the economy of China, you brought up an important point that it's so difficult to change the sentiment or outlook of a population overnight because
Right.
it does take time, and the youth unemployment is a key indicator of what's actually happening there, isn't it?
Right. And one reason we've seen this youth unemployment rise so high is the government started picking winners and losers a few years back. So they really de-emphasized sort of consumer goods, consumer electronics, certainly the financial center, because they felt that was contributing to inequality, which may well be true, but tech and finance can really grow at tremendous rates, and it creates lots of jobs. So if you de-emphasize that sector of the economy, you're really hurting overall growth. So this is something they have to come to grips with in terms of, do we want to shift our growth? Can we figure out something clever to turn this really, really large economy around? It won't be easy.
Mm-hmm. And before we move away from China, there has been headlines in the Wall Street Journal. So we heard about some of the cyber attacks that are happening on U.S. soil. But I do want to focus in on one headline we saw in the Wall Street Journal about a top economist in China going missing. Can you tell us a little bit about that?
So it's a story from the Wall Street Journal, in-depth story, and apparently this fairly high-ranking economist who worked for the government said some things on WeChat that the government didn't like. Now, honestly, from my point of view, and obviously it's translated, it certainly didn't seem very inflammatory. But nevertheless, he disappeared. Now, we know this here. I don't know if they know that in China, but it seems to be a symptom of you get some good news that they're trying to stimulate the economy, and then you get sort of these like facepalm moments where this is really sort of bad for confidence, where you can't be honest. So, for example, they censor the word deflation. So if you say the word deflation a few times, you might get a call from somebody. And when you lose that sort of honesty and the ability for people to tell the government, like, this is your problem, people are afraid to say that. You're going to have problems finding the right rate path. And also, what we just saw this morning in terms of the cyber attacks. Yesterday, I think there was a story where the Chinese government was investigating Calvin Klein and Tommy Hilfiger for potentially not using Chinese source cotton because it may come from the northwest of China, which has some controversy in it. It's things that, on the one hand, you want to build confidence, but on the other hand, you keep taking it away. So it just doubles down on how hard their job is right now.
Yeah, and when we think about the political landscape here in the U.S. and the geopolitical landscape as well, there's so many things that are coming up right ahead of the U.S. presidential election. So November 5th, that election date that we've been all watching, is fast approaching. And ahead of that, here in the U.S. on October 1st, we'll get the vice presidential debate between Walz as well as J.D. Vance. So that is something that we're watching. But also October 1st isn't a reason we're watching that is because the potential of a longshoreman strike in the U.S. affecting the East Coast as well as Gulf ports, and that could have severe ramifications in terms of industry as well as supply chain. So that is something that we'll be watching.
You're exactly right. About roughly $3 billion worth of goods go through those ports on the East Coast and the Gulf Coast daily. Now, this strike hasn't really made the news. I mean, it's starting to make the news now, and as we get closer to October 1st. But a lot of retailers, in anticipation of the Christmas season, have already accelerated some of their shipments in. They're trying to bring them in through the West Coast. Occasionally, they've flown things in because they don't. Listen, I got to have my LG TV, for Christmas, and I want to replace my TV. It's pretty old. So, but nevertheless, that could lead to some supply crunches, could stoke inflation a little bit. Not really on people's radar screens, but it's kind of a big deal when shipping to the east coast of the United States, it gets all held up because you have to either go through the Panama Canal. It's a much longer trip and a lot more expensive. One of the reasons why shipping costs have moved dramatically over the past weeks to months is people trying to avoid this or get it in ahead of time.
And when we think about threats to the supply chain, there are geopolitical tensions around the world. So when we talk about ports or potential disruptions, there are so many areas of the world to keep in mind. And apparently with the potential of this looming longshoreman strike, apparently for one day that the ports are closed, it'll take 6 days to recoup and restart everything. And this also reminds me of what's happening over at Boeing as well. And we know that those negotiations are going to be closely watched as we head into the end of this week. But it also speaks to the unrest and so-called unhappiness of some of these workers in those unions.
Right. I think the overall unions are feeling that this is the best time we've had in a long time. Long term, I think union membership is probably not going to grow. It's just not how the U.S. economy works. We don't manufacture things. The biggest unions are probably government workers, which when you sit back and think about it, it's like, should government workers really be unionized? But I don't want to get too political there, but certainly labor looks like this is a good time for us, and we want to sort of strike while the iron's hot. But your comment made me remember that during the sort of the COVID pandemic supply chain, you'd had dozens of super tankers, not super tankers or ships parked outside of U.S. ports, and it takes a while for these folks to get back in line, get all the workers working again. So the impact post the election may not be negligible. And you just mentioned that the holiday shopping season is around the corner, and this year here in the United States, Thanksgiving falls later on in the month of November. So apparently there are only 27 days between Thanksgiving and Christmas. So between Black Friday and Christmas Eve, the shopping days are going to be short. So I'm sure the retailers have been preparing for this. It matters a lot because half of the revenue, half the profit comes from really the Christmas season. So I expect you to see sales, the Prime Days and similar things earlier in the season because you can't afford to have your Christmas season be bad if you're a U.S. retailer. And speaking of the U.S. consumer, we're going to be getting U.S. GDP figures tomorrow morning, and we also get PC at the end of the week. But this morning we got August new home sales, and those new home sales fell less than expected in the month of August. Right. So for that data point that came out from the Census Bureau, sales of single-family houses fell to a seasonally adjusted annual rate of 716,000, and this was higher than forecast. So this is interesting, but this is a data point that came out last month. Yes. I think those home sales may take a little time to work through, but one thing is we're already getting a wave of refinancings. I think they jumped maybe 15-20% from the previous mark, which is really encouraging because rates are going to continue coming down. So you're seeing, maybe it gives you a clue of how much, how much sort of backup there is in people who want to refinance or are just looking for slightly better rates. And so as we get further rate cuts, you would expect those refinancings to increase, and hopefully sales of homes to be able to go up. Certainly existing homes and new home sales for people who want to upgrade, and then all of a sudden first-time home buyers, they're finding inventory again because those previous owners were able to get a decent mortgage. So I think we'll see more and more of this. Perhaps in the first quarter, certainly in the spring selling season, maybe the best one we've had in several years. And Tai, while we are here right now looking at what's happening or moving markets, let's take a look at the major stock averages. So in New York morning trade in midweek, we're seeing the Dow down by triple digits, off by nearly 200 points or nearly 0.5%. At the same time, the Nasdaq Composite Index is higher by about 0.25%, and the S&P 500
500 is nearly flat on the session, but we do have to keep in mind that the Dow and S&P 500 hit new records in the previous session. And very quickly, taking a look at what's moving the Dow Jones Industrial Average on this Wednesday morning, we are seeing Intel rally by 4%, but we are seeing some key names in the financial services industry, JP Morgan Chase, as well as Chevron, Boeing in the red this morning. So a lot to keep our eyes on as we head into today's trading session, Tai.
Absolutely. And on that note of data, I would just say that those crude inventories were soft. Certainly the crude stocks, the gasoline, the distillates, all lower than expected. And I think gasoline prices are at their lows maybe during the Biden administration. So you may see that we may be close to a bottom. I actually hedged my heating oil last night because I'm paying $3 a gallon for heating oil. I just locked that in. Last year I had to lock in an option at almost $4. So I ended up paying a little less, but this year I'll be paying just over $3, so which is really great. But these sort of low stocks are a little bit of a concern going forward. Now, I would say that WTI and Brent are actually lower on the day, but I think it's on the back of a big rally before, and now we're going a little sideways to see where the market goes. Again, I still think that the overall move was corrective, and we have to see if demand increases. And certainly, China, we hope that a Chinese boost would increase energy demand, but it might take a little while to filter through to the crude markets where demand has been soft.
Yeah, and as you mentioned, we did see gains for crude energy commodities yesterday, which came on the heels of those stimulus measures announced by the PBOC yesterday. So it's interesting to see that Brent and WTI are off by 1.5% today.
Right. I should also note another market that's been very sensitive to China is base metals. And copper and aluminum, they're all higher today, but just modestly versus the big jump they had originally. So the impact and subsequent impacts on Chinese monetary policy will probably have a little less of an impact. Now we're all waiting for that fiscal package. Not quite sure when it comes.
And I think while we're talking about energy, this might be a good time to talk about OpenAI, because we've talked last week as well as this week about the energy demands of artificial intelligence as well as data centers, right? So that's something that we want to keep in mind. And apparently at a White House meeting, OpenAI's Sam Altman pitched the Biden administration, and this was on the idea of multiple 5-gigawatt data centers across the U.S. So what do you think about this?
That's 5 gigawatts. That's a lot. 5 gigawatts is, people compare it to, that's like what 5 nuclear reactors would produce. And it's enough to power like 3 million homes, which is like Miami, right? That's big. So if you have data centers this big, and I wonder if people are just sort of projecting it like Moore's law, we grow here and we keep growing on this trajectory, how much we're going to need. It may well be true. I can't say that I'm an AI expert, but I don't know where you're going to get this energy from. We don't have. The other day we spoke about how they're bringing back one of the 3 Mile Island reactors from Microsoft, which is really amazing. But the truth is, we don't have that many sort of mothballed reactors. Our nuclear policy in this country has been awful compared to places like France, where their nuclear reactors are all the same. So it's really easy to put another one in. You know exactly what to do. Everything was slightly different, and there's a lot more resistance in this country, as in many other countries, to nuclear power. But if we really want to be low carbon and green, that is really the way to go. I'm trying to figure out how our investors can make money out of this, but that could be a lot more energy that we need. But it's a question of being able to hook it up to the grid, and the grid in this country is old. So you got to have a lot of new energy, but if you don't have it hooked up to the grid, do you actually build a power station or power generation facility close to the AI data center? You put the AI data center close to the facility. Can you maybe bypass the grid in some cases. It's all questions that we're going to have to look at because there are a lot of bottlenecks in the U.S. energy sort of distribution system. But it really is amazing that when you talk about 5 gigawatt, sort of reactors, needs, that's big.
And I think with this demand for energy, especially as AI continues to be a burgeoning industry, we know that there's going to be climbing demand. And as you mentioned, the sustainability push. So here in New York City this week, we are having Climate Week with all the diplomats, nation-state leaders, as well as policymakers gathering at the UN, and they're talking about sustainability. But when we're thinking about the reality, right, even with electric vehicles, that push, you need to be able to charge your vehicles and you need batteries. And when we're talking about how these batteries are sourced and created, the proper recycling and disposal, there are a lot of so-called non-green elements related to this, right?
That is absolutely true. So, there are goals, there are sort of lofty goals that we want to get away from using carbon to generate our electricity, and we're pretty far away from that. We're using a lot less coal, we're using a lot more natural gas, but that's still not carbon free, and we're used to having energy when we need it. So you can have solar and you can have renewables and wind, but that might not bring you energy when you need it. And our ability our technology in terms of able to store it in battery form is still relatively rudimentary, or it's in its early days. So we're going to have to be able to produce that electricity if we want to have all these AI data centers, and that's going to come from carbon, for the foreseeable future.
Yeah, so we will definitely have to keep an eye on this sector as we move forward, and especially as AI continues to grow. So one story that I want to shift our focus to is, of course, we're counting down to the U.S. presidential election here stateside, and we've been watching other elections take place across the globe in 2024. But we do have the first round of the LDP presidential election, which will be held on Friday, September 27th in Japan. So what will you be keeping your eyes on with this?
So, this is, Japanese internal politics is relatively unknown here in the United States, and the LDP was actually the party that really controlled the government for many, many decades after Second World War, and whoever is now will become the head of the LDP will become the prime minister. What's particularly interesting is one of the leading candidates, a woman named Sane Takaichi, I hope I pronounced her name correctly, and she's an acolyte of former Prime Minister Shinzo Abe, whose Abenomics, he really got rates super low, below zero, maybe credited with finally getting the Japanese economy back on its feet after a generation of sort of deflation and things of what China is basically trying to avoid. And he was unfortunately assassinated in 2022 in a tremendous shock in a country that's not used to that sort of thing. But she's an acolyte of his, and it's believed that even though the Bank of Japan is independent, they listen to the government, the prime minister, more than they do in the U.S. Or in some of the Western countries. So if she becomes basically the next prime minister, it's going to make the Japanese proposed rate hikes, maybe the Bank of Japan's rate hikes, more difficult, which is why I think you've seen dollar yen, try to push a little bit higher over the last couple of sessions, because if she gets in, you might see a big rally in dollar yen. The yen might drop, maybe it moves back closer to 150 than 140. So maybe a little more opportunity for the yen carry trade.
Yeah, you do bring up a very important point, because when it comes to monetary policy and the relationship of who's in that prime position, we do see that being affected. So I was going to ask you about that, but we are nearing the end of today's session already.
So
as we head into the Friday session, we'll keep all of you updated. And Tai, as always, a pleasure to go through the headlines and what's moving the market. So thank you so much for joining me. And coming up next, we will be joined by Inku Kang, who's the ETF specialist at Grayscale. Don't go away. We'll be right back.